Alright. In this video, I'm going to talk about the Tesla squeeze from September and October of 2021, how to follow options flow and use technical analysis, especially Fibonacci retracements, to combine both technicals and flow and find trends in the market. Let me start by saying that I'm not a financial advisor, I'm not a tax advisor. Everything that I talk about shouldn't be taken for financial advice. It's all for educational and entertainment purposes only. Now let's begin. I tweet about the TTM Squeeze indicator. My name is Orlando. My @ on Twitter is @thisorlando. And I talked about the TTM Squeeze, how I use it, how I utilize it. Most of the technicals and technical indicators, in my opinion, are lagging. This is why I kind of combine flow and options flow. That's also my style, but obviously anyone in their own styles. And I'm going to show you quick what I saw on the TTM Squeeze, and then I'll go to the daily chart and kind of touch both technicals and options flow. First of all, here, this is a consolidation zone based on the TTM Squeeze. This was the area. Right here, we went back into a buy signal zone and an active squeeze. This was the area. White signal, white arrow is when we saw a lot of options flow. This was what I posted. That was the last part of this tweet. And I also posted a screenshot from Unusual Wealth, which we'll use to dive into the trades from back then in 2021. And I was asked about this trade. So again, this is what I'm going to touch and talk about in the options flow analysis part of this video. Now let's go back into the chart. This is let's do the 1 year daily chart from end of 2020, so around December 2020, all the way to end of January of 2022. Yeah, so we have all the way from beginning of 2021 to beginning of 2022. Now, I'm going to show you guys some Fibonacci retracements cycles that I've followed using solely the golden pocket and golden ratio. This was to me a big downtrend ever since this area, which is January and February of 2021. We saw a rejection in this area and then retraced back all the way to here in March 5th, 2021. So around March 2021. I'm going to take this all the way here and take a look how it respected this downtrend. The first test of the golden pocket is the area between the 61.8 and 65% Fibonacci retracements. The 61.8, which is the 0.618, is the golden ratio. If you guys want me to make a video about Fibonacci retracements and how I use them for both short-term and long-term cycles and to create both support and resistance levels, let me know in the comments. I can make a video about it. Now I'm going to focus about this. First of all, over here, we got a first rejection in the golden ratio, in the golden pocket, around April 2021. Then we got another rejection right here in the entry of the golden pocket, around beginning of September 2021. And then the third time broke the downtrend, which is almost a year of a downtrend, at least in the Fib cycle. And then that's where I could actually start a new cycle. Now, I'm going to remove the Fib retracements now. And by the way, if you guys draw just for fun, yeah, you gotta F around to find out. If you guys draw from the same levels over here, let's say, or even after COVID. So let's say after the COVID crash, which was all the way here. And this is split adjusted, meaning the prices are different than what we're going to talk about, but obviously it's still relevant. This is the COVID crash over here, right? So March. We'll take a Fib level all the way from the lowest point post-COVID crash and create an uptrend all the way to all-time highs. Look where we just bounced, basically a few weeks ago, right at the golden ratio of the uptrend. That's just some showing you that if we F around, we can find out. Now let's dive into options flow. Okay. Options flow part can get a bit confusing. I'll try to make it as simple as possibly can, but again, feel free to ask me any questions. If you guys know me from Twitter, I really try to reply to everyone. I'll do the same thing here for in YouTube, so feel free to ask anything or share ideas. I love to learn as well. If you have anything to add to what I talk about, feel free to share. Same thing now. All right, we got the beginning of 2021 all the way to beginning of 2022. That's around a 1 year, 1 day chart. Each candle represents 1 day. No technicals, no nothing. We're just going to talk about options flow. Now I'm going to zoom in a little bit. This is what I want you guys to see. This is the squeeze that happened in October and topped in November 5th. Now let's go into option flow. This is filtered by above $100 million premium worth on unusual wealth, between 300 and 400 strike. At the time, it was a deep in the money call strike. Why? Because the stock was traded at 725. Again, on my tweet that I tweeted, I posted this call roll, meaning they actually rolled call options from September to October. How do I know that? Let me show you. Over here, we have 3,000 side and 3,000 side, but that's not enough. I remember this trade. I was trading it, so I'll remove a zero. Premium now gonna be 10 million, and here it is. Now we found the whole trade. The trade was 392 calls, September 17th, which is September OPEX, monthly OPEX. OPEX is options expiration. And the second leg was 390 calls for October monthly OPEX, which is October 15th. September 17th, October 15th. These are the two dotted red lines that we have here. This is September 17th, and this is October 15th. All right, now let's go back. The white arrow here is the trade that we're talking about right now. This one, the white arrow, on September 3rd. Here we go, September 3rd. How do I know they rolled it? First of all, obviously it's from experience, but it's really simple. I want you guys to see. It's at exactly the same time. It's the same size of a trade, meaning 392 calls for September monthly and 390 calls for October monthly. Add them together, 3,000, 375, 375, 3750, right? Same thing here, 3,000, 375, 375, 3750. The same exact side at the same exact time. Flow trader, you don't see these trades often. So this is a roll. Now let's click on the contract in September. What we can see here is that on September 3rd, we saw the high volume. You see this? This is where we saw the 3750, really unusual volume. If you look historically, such a deep in the money contract, this is not something that you see every day. Meaning, and this is just a speculative bet. In my opinion, it was an options dealer or a market maker that moved size. And this is why we like flow. We can play and trade based on flow and based on options activity. A day later, which was the next trading day, September 7th, you could see that OI reduced in 30, 60, 70. Meaning we know that they closed those 917 calls. What did they do with them? Let's look at the October one. At the same date, September 3rd, they bought the October ones. You see? Plus 3751. Meaning on September 3rd, we had an OI of 22 contracts. Volume was 3751. Meaning something, this is unusual. Follow the following day. Again, I followed it on TOS, Think or Swim, but you can use any platform, any flow monitoring service, obviously. You can see that they actually opened them. Now, if we'll go a bit higher, and again, that's why we always gotta keep following the flow, keep monitoring the flow. It's not super easy, but this is the way. Look what happened here. October 7th, another unusual volume, exactly the same size of a trade. A day later, they closed October. Now let's see. We touched about this trade. They rolled September in the money calls into October in the money calls. Now, this is a bit more experience, but delta is kind of the same. IV is also not that much of a difference, meaning it's not going to create a huge of a difference. And they basically just rolled size. Now, let's see what they did with the 390 calls from October, because we did see that they sold them. Look at the next time that we see same size. Now it's over $10 million premium worth. Only in the money calls, above 300, below 400, and only calls, no puts. This is the same exact trade. You guys agree? I mean, look at the same time. The sizes, if you add them together, let's say around a little bit more, reduce it to 1 million. Take a look. If you add this together, 2100, 263, 262, 900, 112, 113, they're all going to equal 3750. You can do the math, you'll see. This was the 390 calls for October. Meaning this is what they sold. Let's press on this. The trade was October 7th. If we'll press on this, we can see here, you see, a day after, OI went down. And again, you can check it out on every platform broker that you use. Volume was super high. OI just dropped from 37.78 to 28 contracts. Now we do see at the same exact time, the same exact size, right? 3,000, 375, 375, again, 3750 size. Now it's 392 calls, but now it's for January. Now they bought some more time. Now they're buying, what, over 3 months. That's time. And January, it's a big options chain. Institutions love this options chain. And obviously, it's a monthly options chain. Floor trader. In terms of delta differences, this is, I kind of thought that's going to create a delta hedging effect and volatility. But what we know that they did close October to roll it into January. This was the new position. Now, a quick note, an important one. I know that it says here at the bid. I know it says here at the ask, but they actually sold 392 and they bought 390. I know it says here same thing. Ask is this October 15th 390 calls, and bid side was the 392 calls for January. But bid doesn't mean necessarily sell, ask doesn't mean necessarily buy. It's very important to understand it. First of all, we have two sides to every trade, whether if it's a market maker or retail or institution, someone's going to write the option, someone's going to buy it. So we can't think about it as just bullish or bearish or buy or sell. We need to look at the bigger picture. The bigger picture for me here was pretty simple, that someone is rolling size. And if we follow the eye, we saw that they just got a really good feel, really good price, because this type of a trade, this size, hundreds of millions of dollars, they just got a good deal. Meaning they sold at the ask, right? Close to the ask, not exactly at the ask. And they bought closer to the bid. Same with this roll. Now this roll was, again, like we said, from October monthly to January monthly on October 7th. Let's look at the chart again. This is October 7th, see? Now if this is October 7th and they rolled from this monthly OPEX, options expiration, October, all the way to January, this is going to be, this is going to create an effect of delta hedging right after October OPEX. And this is why we want to combine flow with technicals. Like I said, in my opinion, technicals are mostly lagging indicators. It can't tell you the future. Following institutional options activity can tell you the future. Why? Because you see where they're positioning and you can time it with work, where if you combine technicals, you combine flow, you look at sector rotations, market sentiment, and everything. By the way, here, November 2021, that's where the market started selling tech. You had crazy option spreads, bearish option spreads on the QQQ, which is the tech Nasdaq ETF. And that's how I kind of knew here, if you guys remember that I talked about in December and January of 2022, that no idea what's going to happen, but something wild is happening in terms of a bearish positioning into 2022. And obviously we had a bear market in the whole market. Now again, going back into this trade on Tesla quick, this is how I like to play it. I'm not trying to time bottoms, I'm not trying to time tops. I'm trying to time volatility. Anyone who entered here could have held for a few weeks, and even though it went up a little bit, would have lost on their options maybe because of decay. I'm looking for this move on this type of plays when I see this size and this type of unusual options activity, especially with Tesla, because it's a stock that I like, I know, I trade it. And this is where I entered with calls mid-end of October. I waited for after October OPEX basically. And again, we can speculate, maybe they exercised eventually, maybe they just wanted to roll, whatever. And the second that they rolled from October to January, which is a huge change, this is bullish. This is why now we're gonna see a lot of activity in the market. The time of this video when I'm making it is December 4th. And we have a lot of options flow and sector rotations, volatile rotations, as everyone can obviously see in materials, which is silver and gold, in China related stocks, in ETFs. So it's very interesting to see the next month and 2 months on the market. But that's it. That's about Tesla. And this is how to read call options roll. They rolled it from September to October. Then over here in the green arrow, they rolled it from October to January. Delta was a bit lower on the January options, as you guys can see here, meaning they sold 99 delta. They bought 96 delta. It's still in the money, right? Because at the time before the split, Tesla was 788 and the in the money call option is 392. Even if you look at IV, really low IV, because they have so much time, meaning they don't expect much of a volatile reaction like the 205 IV on 390. But again, that's just more stuff that if you liked what you saw in this video and you have specific questions, feel free to ask in the comment section below, and I can make more videos if you like it, but just let me know if you did. And I think that's it, right? I mean, we touched Tesla, we talked about the 2021 squeeze. If you guys follow me on Twitter, you probably see all the tweets that I tweet about Tesla in terms of the big rolls. So I posted here about this move. I posted here about a huge roll that I saw on Tesla. And what it was actually kind of the same thing, call options roll, but it was a super bearish one. And unlike this one, which was in the money, so it was a very bullish one. And that's it. That's it. This was a bit of a rundown on options flow, technicals on Tesla, and I hope you guys enjoyed it. Let me know if you did. Feel free to like the video, and let me know if you want more videos like this one. This is the way.